Trading hours in the Indian stock market might get extended soon. Currently, all of us traders sit in front of the system from 9 am to 3:30 pm and we are kind of relieved when the market ends. But now the change is that the market timings might get extended to 11:55 pm. So in this video, let's discuss about who wants this change to happen, who will benefit from this and who will not, and why this change is happening now. This is Ajay Ajit. Welcome to Market Feed. So why is this change happening now? So for that, let's look at the new appointment of the NSE CEO. The current CEO of the NSE or the National Stock Exchange got appointed on 26 July 2022 and he is coming in lashing with some new changes. But a quick minute to understand the credentials of Mr. Ashish Chauhan, who is the current CEO of the National Stock Exchange. In 1993, Ashish Chauhan and 4 others were actually assigned the job of creating NSE itself, and he is known as the father of Indian derivatives. So after creating Nifty 50, the NSDL and Indian derivatives segment itself, he actually left NSE in 2001 for following his own entrepreneurial ventures, and he joined the Reliance Group companies and served as the CIO, the Chief Information Officer for the Reliance Group for a long time. Fun fact, he was even the CEO of Mumbai Indians, yes, the IPL team as you know it. And in 2012, he returned to the Indian markets as the chief of Bombay Stock Exchange, and he served there for 10 years, and he took the index or the Bombay Stock Exchange from a very bad position back in 2012 to a respectable position in 2022. And now he is back to the National Stock Exchange. The father of NSE is now back with his actual creation. So what is his actual concern? Because when Ashish Kumar Chauhan took charge of NSE in July 2022, this is his major change to bring about a change in market timings. He is concerned that SGX Nifty, that is trading in the Singapore market, is taking away trading volumes from the Indian market. So Mr. Ashish Chauhan actually feels that if we extend the trading hours, we might get back some of those volumes. And his opinion is that the brokers infrastructure has caught up, the market infrastructure has caught up, the banking infrastructure has caught up, and there is actually nothing blocking us from increasing the trading time than the market participants themselves. He is saying that it is not a sudden change. All market players have been ready for this move, and now he wants to push for this. So now that we know why the NSE CEO wants to change the market timings, let us see how it actually equates with global markets. So let's quickly look at how other markets in India itself are actually what their timings are, right? So the currency market actually trades between 9 am and 5 pm in India, and that is coming under the control of RBI, and everything is happy there. So the NSE chief is showing that, right? So everything is happy here, nobody has an issue. Then what is the actual issue when the stock market timings are changed? And even in the Indian markets, currently the equity and derivative segment are traded between 9 am and 3:30 pm, and the actual change that he wants to push is for equity markets to be extended from 9 am to 5 pm and the derivative markets to actually trade between 9 am and 11:55 pm. Because if we are looking at the multi-commodity index or the commodities exchange in India, it is actually following that time. It is trading between 9 am and 11:55 pm. So what is the actual issue is once again the question of the NSE chief. Knowing that SGX Nifty is a major competitor in the eyes of Mr. Chauhan, let us look at the timings of that exchange as well. So the Singapore exchange SGX Nifty actually trades between 6:30 am and 11 pm Indian Standard Time. And since the Singapore Nifty is actually open for more hours, the international players that are actually trading in the SGX Nifty, which is actually a derivative of our own Nifty, instead of in the Indian market. So what is the benefit there? If they expect the Indian markets to fall tomorrow because maybe the US market is in the red tonight, they can actually take a short position in SGX Nifty, which they can't do in the Indian market now because our market closes at 3:30 pm. There is also a lesser known risk, which is CFDs, contract for differences, which are actually traded in the Dubai market as well, which is also taking away from volume and interest from the Indian market. Yes, maybe Mr. Ashish Kumar Chauhan is actually valid in his points, but why is the market actually going crazy by hearing these changes? Let us look at the actual history of Indian stock market timings to understand this. Because if you think that this has always been the market timings, then you, my friend, are wrong. Throughout the late 1980s, the Indian markets actually traded for just 2.5 hours from 12 pm to 2:30 pm, and this was actually changed in the early 90s from 12 pm to 3 pm, an extension of 30 minutes which was quickly rejected by the markets. The market players were not able to handle the actual physical paperwork in the 1990s, and the market hours had to be reduced 1 hour from 12 pm to 2 pm. Despite the crazy volumes that happened in the early years, NSE actually came in 1994, and by 1997 actually adopted the new timing of 9:55 am to 3:30 pm. Again, looking at the history, in October 2009, SEBI actually allowed the Indian markets, or the Indian equity markets to be precise, to trade from 9 am to 5 pm. Yes, way back into October 2009. But after a lot of back and forth, the brokers actually very sadly accepted the fact that NSE and BSE had actually both decided to change the 9:55 am starting time to 9 am, but the 3:30 pm standard closing time was still maintained, and it is still being maintained in 2023. You should read articles from that time period when the market hours were extended for 1 hour, just 1 hour. Brokers were sad. There were actual news articles of people actually changing careers because they no longer could survive in the broking industry, and everybody was sad. But now it is a new normal, right? You and I know the market hours very much easily as 9 am to 3:30 pm, and we are okay with it. And looking back, trading has altogether just benefited from all these timing changes. Now let's look at if there is something crazy about what the NSE chief is pushing, because back in October 2018, SEBI, which is the governing body of all stock markets in India, actually pushed a legislation that allowed futures and options to be traded till 11:55 pm. Yes, way back in 2018. So the NSE chief already has support from SEBI and the government, and now that all the change that he has to bring in, all that he needs is support from players like brokers and market participants like retail traders. So coming towards the end of the video, what could happen if this change is actually implemented? Who could benefit and who could not? So let's start with the first point. The first set of people that could actually benefit from the longer trading hours are positional traders, because if you're looking at it, positional traders will be able to avoid huge gap ups or gap downs in the market, and they can easily continue taking their peaceful trade. They will also get more time to react to changes in the international market. The second set of people that could actually benefit from this are office going people, because if you're looking at a standard working time in India, it is actually between 9 to 5, and nobody going to the office is actually able to trade. But if the trading times are actually extended, maybe more market players can come in, right? All those who are going to work for a day can actually come back to home and start trading the markets. That could actually push up the liquidity in the market. 3, mutual funds can get better price discovery, because if you're looking at it, if you're investing in a mutual fund on a Thursday 5 pm, the market is closed and the actual transaction goes through only in the next morning, right? So all those gaps, the mutual funds are not able to actually place your trade in the market. And 4, obviously exchanges, because the transactions in the exchange will go up no matter what, right? Even if the hours are extended, maybe the retail participant might slow down, but still institutional players are expected to come in, and the exchanges will get a huge revenue as part of that. Now let's look at the set of people who actually could get in trouble because of this market change. 1, let's actually start with the case of a full-time trader. He actually trades between 9 am and 3:30 pm, and he is happily living his life after that. If trading hours are increased for futures and options players, the trading time will actually double till 11:55 pm, and definitely it will become more difficult for them, and trading as a profession might not be a thing anymore. 2, backtested strategies might not work anymore, because listen to this very closely. You have backtested data for whatever was the earlier trading time, right? But now the futures and options timings are all different. 3, the third risk is that liquidity might not be maintained throughout the market times, because if you're a trader who is coming in to trade at say 7 p.m. What if there is no liquidity in the market? Currently, we know that at least in Nifty and Bank Nifty contracts, there will always be liquidity between 9 a.m. and 3:30 p.m. But if trading hours are extended, we may not be able to confirm the same. So the industry as such might be in front of an unforeseen risk. 4. Brokers will also need to comply, because if you are looking at a broker's life, it will also get more difficult because there are more chances of tech failures. There are even chances of some smaller broking firms closing down entirely. The large players with good tech do not have to worry about this, but I am talking about maybe a small scale firm in your homeland which you're trading with that might actually have to close down because they'll not be able to serve the customers between 9 a.m. till the midnight. And the last point, chances of brokerage increasing and retailers getting in more trouble, because Nitin Kamath, the CEO of Zerodha, has come out and said that all these changes, all these rule changes from SEBI and NSE, it is actually pushing up their charges or their expenses, and in the long run they might have to increase the brokerage rates to stay afloat. And our close sources actually reported that even a 50% increase in brokerage can be expected if the market hours actually change, and this is definitely not good for us. So let's come to the conclusions of the video. Is it actually avoidable? Inside sources in the industry actually says that not all brokers are in with the idea of the NSE chief to push the market timing. Settlement infrastructure is still not seamless, and the timings for broking firms might go crazy. Tech-enabled new-gen firms like Zerodha and Fires might be able to get out of this situation without much harm, but this will inevitably lead to higher brokerage charges. And if the NSE chief is actually adamant and he wants to change the timings, the government is with him, and the brokers and us as retailers will have to comply. There is actually no other choices for us, because reports are that the NSE chief is actually trying to convince all brokers to push the market timings. Let's see what happens there. Again, Mr. Ashish Kumar Chauhan sir, I as a trader understand your point of bringing all those FII liquidity back into the Indian markets, but you still have an OI limit, that is per OI limit of 15% on options for FIIs, and if that is still the case, how do you expect market liquidity to actually increase in the futures and options segment? And I feel it is a fast and rather long-sighted approach from the National Stock Exchange. Yes, you may say that a long-sighted approach is always good, but no, in the actual short term, this change could bring in a lot of issues to the broking industry and us traders. And my third thought is that I would actually not prefer to be in front of the trading terminal for 15 hours. I would look at more passive strategies and improve my skills in a way that I will no longer be an active participant in the market. So with that, we come to the end of the video. What do you guys think of this timing change proposal from the chief of the National Stock Exchange? Are you in with the idea or are you against it? Let us know all your thoughts in the comments down below. This is Ajay signing off. See you all next time.